We're moving through the late morning trade on Wall Street, and it's time for another quick reset. I'm Grant Mercer. This is Storm Stock Solutions, and we're here to keep some clarity through the chaos of today's markets. The headline driving the macro narrative is still that GDP report, but the tone around it has sharpened a bit. According to Jeffrey Bartash at MarketWatch, the U.S. economy posted a 430% annualized growth rate in the third quarter, the fastest in 2 years. But the updated framing is important. Between the long government shutdown and signs of cooling into year-end, this looks more like a high-water mark than a new trend. For traders, that combination of strong, backward-looking data, softer outlook ahead is tricky. On the one hand, it validates why earnings have held up and why labor markets haven't cratered. On the other, it keeps the focus on potential deceleration in the current and coming quarters. Areas tightly tied to growth expectations, cyclicals, small caps, and economically sensitive sectors are the ones to handle with care as the market weighs whether this was as good as it gets for a while. On the corporate side, there's still plenty of interest in tech and AI infrastructure. Christine G's reporting at MarketWatch details ServiceNow's roughly $7.7 billion acquisition of cybersecurity firm Armis, a clear bet on securing the vast sprawl of AI-enabled systems. The company is talking about building an AI control tower, which underscores a bigger theme. As AI spreads, the attack surface for cyber threats expands, and that can shift capital flows into security tools, observability, and risk management platforms. Even if you're not trading this deal specifically, it signals that M&A in AI-adjacent software remains alive and well. Under the surface, a few sleeper themes keep bubbling up. One is gold and precious metals. Barbara Kohlmeier highlights how Ed Yardeni, who correctly projected gold above $4,000 by year-end, is now sketching a path to $6,000 by the end of 2026, if conditions line up. Professionals will be watching whether this morning's strength in metals is just momentum chasing into year-end, or part of a longer arc tied to real rates, currency worries, and geopolitical tension. It's a classic watch the tape, not just the target scenario. Another quiet but important trend is in next-generation compute. A MarketWatch piece by Charlie Garcia argues that quantum-related stocks may be roughly where AI leaders were 5 years ago, with the Pentagon likening quantum computing to a modern Manhattan project in China only nanoseconds behind. That doesn't make it a green light to pile into speculative names, but it does mark quantum as a strategic theme that could get more policy attention, more funding, and more volatility as real-world applications start to emerge. We're also seeing stock-specific interest in defensive and value-oriented plays. Tommy Kilgore reports that Kroger has stepped up its stock buyback program, even as its shares flirt with their worst month in 3 years. When a staple grocer leans into buybacks during a weak stretch, it can catch the eye of investors who focus on capital return and balance sheet strength, especially if broader market leadership remains narrow in mega-cap tech. And in the background of all of this, longer-term strategists are laying out their roadmaps. Jules Rimmer's piece at MarketWatch details how UZS Wealth Management is pointing to specific catalysts it thinks could reignite stock market momentum into 2026, including earnings growth, productivity from AI, and potential policy shifts. Traders may not trade those notes tick for tick, but they often frame how institutions think about dips, rotations, and sector allocations going into a new year. Into the next hour, I'll be watching whether the GDP narrative tilts more toward peak growth anxiety or remains a support for risk assets. How the market digests that ServiceNow Armis deal across the broader software and cyber complex, and whether gold and other macro hedges keep attracting flows. Remember, this is information and education, not personalized financial advice. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,